But focus on Cipla, talk about their numbers, given that the domestic business has, the reportage has been sub the ET estimates. Umang Vohra, MD and Global CEO at Cipla, joins in on the show right now. Umang, if you could talk about the India business first up, because that's looking very weak with some one-offs as well. Could you update us what exactly went wrong?
Yeah, so we have two elements of unusual, I would say unusual activity in the India business. The first is we received a fair amount of orders towards the end of the month, and our accounting procedures cut off what we can't ship by a certain date. So that's roughly about 90 odd crores of deferral, which means that those revenues get booked into Q2. And then we've also had a model change in our generic distribution business. We've had to do this. We had alluded to it in Q4 that we're going to implement it. And that's a fairly significant impact because the generic business is almost 30% of our overall India business, and that's resulted in the decline predominantly. And so if you look at these two factors back, I think the India business would have shown respectable growth.
Okay. Do you think the lumpy nature of India business, though, will continue? And what is the kind of growth that you're expecting for the latter part of the year?
So I think first of all, Cipla in Q2, Q3, Q4 should begin to beat industry or match industry growth, right? So we are saying industry leading growth is something that we'll try and target in Q2, Q3 and Q4. See, when we talk about lumpiness in India business, there are several factors at play and most companies have been adjusting to it differently. I think what we've underestimated is the amount of change that's happened in the distribution side of this business. You've suddenly had consolidators, you've had aggregators, you have large buying groups now, and the fabric of the industry has changed. And I think different companies at different points in time have responded to this. Some responded in the previous year, some responded in this year, some will respond at the later half of the year. So it's largely linked to the way the distribution system in the country is changing. So I think that creates lumpiness because you decide to respond to it in a quarter and then that quarter becomes a base for the next particular.
And India we have spoken about, but what about other markets like South Africa, other emerging markets? Around 17%. Emerging market fall, EM fall by 40% and globally API was down by 9%. What happened to other markets?
So let's talk about South Africa. I think South Africa, if you look at our private market business, it's up, it's ahead, it's growing faster than market, it's large, it's about 60-70% of our overall business in South Africa. The tender business is rebasing. The tender business is rebased because there's a new tender out and the new tender is at a different price level than the old tender was. Now this tender is going to be around for 3 years, it will rebase after 3 years again. But I think we're at pretty much the end of that rebasing cycle, maybe a quarter more or so, and then the numbers would perhaps be rebased to the new tender and when it was issued. So maybe a quarter or max 2 quarters more. But other than that, volume growth continues to be strong. South Africa is also growing in the private market, as I mentioned. Emerging markets also had a cut-off issue, and that was linked more to the rain in the last week when we had excessive rainfall in India, in Mumbai. So our depots could not bail out stock that was to go out of the country, and as a result of that, we've had a deferral of revenues even there to the extent of almost $15 million.
Now, ex-US and India business, what is the visibility for other markets?
So I think South Africa should eventually get back to growth. I think the private market will grow faster to outstrip what we are seeing on the tender side of the business. I think emerging markets, we're not looking at very aggressive growth profiles. If it stays at where it is, that's probably a reflection of the stress we see in the geopolitical system around the Middle East. So I think from a growth engine, it will be India, it will be the US, it will be to some extent South Africa. And after a quarter or two, it will definitely be more of South Africa because the tender business would be rebased.
Okay, the US business led by some strong performance. What did the base business grow by X, the one-off drug? What's the expectation on growth in this year as well?
Certainly, I think the one-off will belong to Cinacalcet. The base business has grown irrespective of Cinacalcet over the previous year. It's grown. The one-off of Cinacalcet is also strong. I think it's marginally lower than the previous quarter, but our base business has also shown respectable growth in the US.
And what will be a sustainable number in the US on a quarterly basis? Do you expect things that will, growth will only be led by improvement in lead by new launches?
That's right. I think the US business responds to launches. So we've had one quarter where we've not had any meaningful launch. And we are hoping that our launch momentum starts again in quarter 3 or quarter 4 of this year, where we'll guide to more launches. So till that time, I think the US business would be a little range bound. But I think we have a good, impressive pipeline coming up starting quarter 3 for the US.
Okay. Could you also talk about the US market in terms of generic pricing environment, given that you have a substantial size there?
Yes, it would be. It would be definitely important for Cipla because our base has increased for our DTM business. Earlier we were much smaller and now we are almost at 120 or whatever, 115, 20, 125 million range. So I think, yes, the base business would come under the pricing pressure as well, but we are already facing that pressure. It's in our numbers already. And we don't believe the pricing pressure is fully stabilized. We do see that large businesses are now reorganizing and restructuring, and we think that in some way this is an opportunity for a company like Cipla and many other emerging market companies based out of India.
Right. Globally, one has seen Mylan-Teva deal. What is it that you're expecting in terms of consolidation in the industry? More such deals, you think?
I think it would be to the peak because, you've seen announcements from Teva, you've seen it from Mylan. The underlying stress is the lack of growth. And the underlying stress is to, try and see how overall as a bigger company, profitability turns more solid, cash flow turns more solid. So it gives them tremendous vantage and currency power. I do think that, that there might be one or two other companies which are larger in size, which may go through this option as well. But overall, I think from a set of markets from India perspective, I still think that, there is a fair amount of growth to be had, but it has to come in different ways in the US now.
Now, EBITDA margin at 22.7 and is above estimates mainly because of exclusivity which you enjoyed in the Senspair drug. What is the margin trend now that the exclusivity effect or the booster shot you got because of this one drug exclusivity which will wane away?
So I think it is core exclusivity. It is also the fact that we have been working quite relentlessly on cost control. And I think the way I would look at our business is that our margin profile would be roughly where we were last year in terms of the overall margins that we declared for the year. And we had guided earlier that we will try and improve that on a full year basis. And we're working towards that goal.
Thank you, Umang, and thanks for joining us this morning.